Hi everyone, welcome to Value. So today we're looking at the biggest question of all, why you keep losing money. Because decisions that you would have made last year would have made you really, really good profits. Whereas this year, you make that decision and you lose money. Or you continue to hold and you lose money. You buy a stock on a dip and you lose money. And it's probably just driving you crazy and you don't understand why, or maybe you do understand why. But sometimes you kind of think it's a different reason or another reason. But overall, it's a very simple reason why the whole market in general is not doing well, and that is interest rates are increasing. So we had the Fed that's going to increase interest rates by 75 basis points again in November the 2nd. And basically, they won't stop until inflation halves. So that's a big question. When is inflation going to halve? Probably no one knows. It probably could take until middle of next year, for all we know. So right in August, inflation was 8.5%, and in September, well, actually in October, inflation was 8.2%. So yeah, you've got 2 months that have gone past, and then basically inflation has barely dropped. So we're waiting for numbers that are about to come very, very soon at the start of next month. And we're going to find out what the rate of inflation is. I don't think it's going to be down by that much. Hence why expectations that inflation is going to continue to increase, and then basically we're going to have a lot more pressure on the market because it increases the cost of capital. It also makes other asset products like bonds quite more attractive because they have a higher rate of return, and then it also means less money into the stock market, and it reduces the valuations in general. And stocks that you thought you were getting at a really, really good price, they will continue to drop. And basically, it's going to continue to hurt you as long as interest rates go up. It's a very, very simple answer that it's not that wise to be buying too many stocks. Only buy them if they're like super, super good value. You see a lot of long-term potential in them, and in basically, as long as you can hold past this stage where the interest rates are rising so quickly, the minute interest rates stable out or they drop, that's when your time is to shine. And we don't know when that is. So always make sure you have capital on the sidelines, because even though you're seeing really, really good pricing, I think you're going to see a bit better pricing in the coming months, because there's just going to be more interest rates increases, and it's just going to continue to put a lot of pressure on the market, and hence why you keep losing money. So I hope that was, in a way, a simple enough explanation why the markets, are under so much pressure, why you're losing money, and basically the factors that you're going to be looking at. You're going to be looking at interest rates. You're going to be looking at inflation, and when inflation starts to go down, maybe when it's like 4 or 5%, then we will see interest rates start to stable out and potentially drop over time to kind of help the economy stable out a bit as well, and not just head towards a massive recession. And yeah, I think that's going to be everything that we're going to be watching. I think in general, it's always, something that you got to focus on. Like, you can look at companies, of course, and you can kind of try to make a decision based on the financial metrics. But, interest rates and inflation, those are the wider things in play here, and they're always going to affect every decision you make. So why not pay attention to it? So you got any questions or comments, post below. Until then, good luck investing, everyone.